Welcome to How to Retire on Time, a show that answers your questions about all things retirement, including income, taxes, Social Security, healthcare, and more. This show is an extension of the book, How to Retire on Time, which you can grab today on Amazon, or you can go to www.howtoretireontime.com. My name is Mike Decker. I'm the author of the book, How to Retire on Time, but I'm also a licensed financial advisor, insurance agent, and tax professional, which means when it comes to financial topics, we can pretty much talk about it all. Now, that said, please remember this is just a show. Everything you hear should be considered informational, as in not financial advice. If you want personalized financial advice, then request your wealth analysis from my team today by going to www.yourwealthanalysis.com. With me in the studio today is my esteemed colleague, Mr. David Franson. David, thanks for being here.
Yes, thank you for having me here.
David's going to be reading your questions, and I'm going to do my best to answer them. You can send your questions in right now or anytime during the week. Just save this number, 913-363-1234. Text them in, 913-363-1234, or you can email them to heymike@howtoretireontime.com. Let's begin.
Hey, Mike, should I sell my Nvidia stock? Might be on someone's mind right now. Jump ship.
Okay, fair question.
Yeah.
Very fair question, because of the DeepSeek and the breakthroughs that have been happening. Because of, and I would say for lack of a compliment, this is not a backhanded compliment, but Sam Altman is the CEO of OpenAI.
Right. I've heard of him.
ChatGPT.
Yes.
He's very open and transparent with his thoughts and feelings about things, for better, for worse. There are a lot of unknowns with this. So the questions to really ask, did DeepSeek, the new AI that really shook up the market, were they actually able to build that model for the price that they did in the way that they claim? It is still unclear if that is the case. That said, there's something called creative destruction, and that means the first person that figures something out and does it really, really well, like OpenAI, I would say is the first legitimate person to do what we call AI, okay? They're the biggest, they're the most successful so far. Doesn't mean that they will always be that way. I mean, gosh, look at Kodak. They had the camera market,
right,
and they kind of died. A Blockbuster didn't innovate and kind of died. So there is no guarantee that number one will stay number one. There's an expression about innovators. Innovations create destruction. Destruction meaning those who are not keeping up or maybe innovated in the wrong ways could fall behind. My point being is Nvidia is a chip company that makes chips for very complex large language model AI systems. If you don't need complicated chips to support large language models, Nvidia is less valuable.
Right.
If this is a ruse or there's reason to have complex chips for maybe not the current version of AI. Maybe we can do it on simpler chips, but the next round of AI is going to need more complicated chips. Then maybe they have value. The answer to the question is no one actually knows because we're still trying to figure out what AI is and what resources, chips, are needed to support the product.
Right.
ChatGPT and all these other things.
Yeah.
Right now, this standard is we need these chips, which is why Nvidia is so popular.
Yeah.
But once we don't need Nvidia anymore, they've got to innovate and create simpler chips that are still higher quality or something else.
Right.
But this is risk of having an over-concentrated position on a single company. I recognize a lot of people have made a lot of money on Nvidia. I would just point you to the tech stocks in the 90s. Look at Oracle, look at IBM, look at Amazon, go to ChatGPT.
Oh, yeah.
And just say, what were the big tech stocks in the 90s? And then look at what they did from 2000 on and all the time it took to digest the understanding of what it is and how are we supposed to price it. Nvidia may be experiencing the same thing. They may not be. When you focus on one stock, you increase your risk because you're putting all your chips into that being the right decision. This is what diversification is intended to be. Am I saying you should sell your Nvidia stock? No. First off, I can't give you financial advice. This is a show.
Yeah.
I haven't actually spoken with you. If 100% of your assets are in Nvidia, maybe you ought to consider diversifying a little bit. If over 50% of your assets are in Nvidia, maybe consider diversifying a little bit.
Sure.
The Magnificent Seven, which are the major players of the AI uprising. So you've got Nvidia, Tesla, Microsoft, Apple, Amazon. I mean, all these companies. What are the other two? Google and Meta.
Alphabet.
I think,
yeah.
So they're benefiting from the AI rush. It's the new gold rush, but it's also kind of the new Cold War. Now that we're competing with China.
Yeah.
If DeepSeek, in fact, does send data to China, then it's another TikTok conundrum. What's the political risk associated with that? It's a very complex question, but as a general rule, going too heavy into any stock may not be the best thing. But holding on to some Nvidia, I don't see any problem with that. We just don't know the future.
Yeah.
Are you okay with the risk that you're taking? That said, I think there's another conversation that needs to be had here. So the question is, should I sell my Nvidia?
Yeah, that's the question.
How do you quantify that? I think that's the more appropriate question because everything I just said was completely speculative. Notice how I didn't actually have an answer?
Right.
I just talked in circles about how chips work and how AI and all this speculation.
Right.
So my point being in admitting the speculation is because no one knows the future of the market. No one knows the future of a stock. How do you quantify your investment decisions? So for me personally, I like to look at price or price action, our jargon terms of basically what's the stock selling or being traded at in any given moment.
Okay.
That stock or price, the action of the price going up and down tells a lot. On a daily basis, price is kind of like a voting machine. This is based on Benjamin Graham. Benjamin Graham was kind of the mentor to Warren Buffett. So it's a voting machine. It's kind of like waves in the ocean, a lot of noise, but you don't really know which way the tide is going or coming in.
Okay.
The reason why I say that is if you look back a little bit greater, so over a couple of months, you can start to maybe see some trends or some patterns. I like to quantify trades by solidifying the opinion or the trade based on price and behavior of that price.
Okay.
So examples are if the stock, let's say, is trending above a certain moving average and has exhibited certain patterns that can be in there. I'm struggling to try to keep this simple because we can get so technical so fast. But just think of behavioral patterns. That's the best way to look at it. We can then quantify probability of success based on historical price, allowing us to make educated decisions on if we think that the stock has momentum moving forward or not.
Okay.
Another way to say all of that is basically if it seems like it's becoming popular, people are catching on to it, we might hold it for 3-4 months and then we'll sell it and reevaluate and look at other stocks or other positions. And the reason why I think it's so important to treat it more objectively, to have a system that looks at positions in some sort of mathematical way and not a speculative opinion, is you can quantify your winning ratio. So this algorithm, how many times with real money, not the hypothetical back-tested stuff, but with real money, how many times are you actually making winning trades and losing trades?
Okay.
How great is the winning trade? You can start to create a system and trade based off of the system and not a sentiment. For example, I know based on current data that if we were to buy United Healthcare, we're going to hold the position for about 60 days or so.
Okay.
Then we're going to reassess because we can find a trend and that stock tends to be around there. Now, if we hold Tesla, it's around 90 days because around 45 to 60 days, based on what we have noticed on the behavior of a stock, it can get a little bit squirmy in a certain period of time. And then new news comes out or people get excited about it or people say, oh, it's a good time to buy, whatever it is. But then it has a history on certain conditions that it might go up.
Okay.
I'm not saying that if you buy and hold Tesla for 90 days that it's always going to go up. That is not true. We're buying in based on certain conditions being met. This is complex stuff.
Yeah.
But the guy asked the question or the gal asked the question.
Yeah.
So I want to answer it, right? But we use systems to curb emotions.
Okay. You're looking at like historical price movement action.
Yeah.
Amongst some other things. And then you stay within that. You don't ever ignore that data.
No, you stick to your systems, not sentiment.
Yeah.
And so when we buy a stock or a position, it's because we have high probability based on our internal mathematics that the stock should go up over the next predetermined period of time, whether it's 30 days, 60 days, 90 days, whatever that time is. It's a system.
Yeah.
Systems keep emotions at bay. It's not speculating AI is going to revolutionize the world. No. And the reason why I'm bringing this up is we buy Nvidia all the time.
Yeah.
We also sell Nvidia all the time.
Yeah.
But we're buying in when we believe Nvidia's on an uptick and there's momentum there and we think it's a good time and we'll hold it for X amount of period of time and then we'll sell it and reevaluate.
So regardless of any DeepSeek news, we're going to stick to our system and not get emotional.
Yeah. That's it. It's extremely complicated.
Yeah.
I mean, we've got massive amounts of servers that run these algorithms every night, then put out a report and then keep on with the system. There's no black swan event or something we need to be aware of. These are complicated systems. Not all the trades are winners, right? Nothing's perfect. But in my mind, that is a better system to quantify should you buy or sell something as opposed to try and make an emotional decision. And the reason why I say this is there's a lot of emotional investing. Hey, Trump really wants to drill, baby, drill. Let's buy a bunch of energy. Well, sorry to break it to you, but all of that hype is already priced in to the current energy sector. Oh, AI is going to revolutionize the world. Sorry. All that hype, all of that excitement has already been priced in based on our current information. That's why when the news came out that maybe a large language model dipped a little bit, Nvidia went down because there was new information and that got priced in. So all in all, the big thing I'm trying to reiterate here is find a system and stick to that system. Don't let sentiment overtake you. Don't make emotional investments. It's just, these things matter. And by the way, the thing that I just referred to, they're called absolute return models. You can Google it.
Yeah.
It's on Investopedia. It's just most people don't know to ask for these kinds of models. Most people don't know to even look for them. Most people are almost conditioned to just believe that you buy ETFs and hold them and that's the only thing that's available out there. That's not true. That's just one way. It's just some of the largest voices happen to sell those funds, those passive funds. And so they want you to believe that that's what you should do. More than one way to invest. There's more one way to grow your money. There's more than one way to approach your retirement. There's no such thing as a perfect investment product or strategy. I believe that we should not get emotionally attached to an investment, that we should treat it more objectively as opposed to subjectively. That's all the time we've got for the show today. If you enjoyed the show, consider subscribing to it wherever you get your podcasts. Just search for How to Retire on Time. Discover if your portfolio is built to weather flat market cycles or if you're missing tax minimization opportunities that you may not even know exist. Explore strategies that may be able to help you lower your overall risk while potentially increasing your overall growth and lifestyle flexibility. This is not your ordinary financial analysis. Learn more about Your Wealth Analysis and what it could do for you regardless of your age, asset, or target retirement date. Go to www.yourwealthanalysis.com today to learn more and get started.